Muted.
Hi there, I'm Mark Sebastian, founder of OptionPit.com, and this is the AM Volatility Report. Reminder, this is for educational purposes only. None of this should be considered investment advice. Options have risk. Consult your financial professional. Hey, go to our events page this Saturday, 9:30 a.m. Eastern Time, the Butterfly Intensive. It's going to be 3 to 4 hours of just intense butterfly talk. You will learn a ton. So it should be a lot of fun. All right, so let's talk about the general marketplace. Well, S&P is down 7, and volatility is about where it probably should be. If you look yesterday, let me show you the full tick chart. So let's take a look here, folks. I want you to notice. So this is the VIX. Yesterday we were down we got to down about where we are now, and VIX was kind of a good 0.20% higher. So vol may have we may have a little more to drop to catch up to there, or we're heading right back to rally ho mode. The market's been surprisingly stubborn and unwilling to really let it go, and so we continue to see markets that just sit there. And with that, as you can see, not a lot of action in the ETFs. VIX futures are mostly flat today. They're not doing much at all. Oil, this is where we continue to see volatility is likely too high. It's been choppy, but choppy in a range, and volatility we still see as way too high. This is one we continue to watch. If we traded futures options, we might be all over this, because there is just a massive spread between realized and implied. It's about it's 7.5 points. So that's a huge spread, and given what we've seen, a little bit of a surprise. And longer-term stuff looks very similar. All right, so then you have bonds. We'll look at TLT for that. They're off again today. They had a nice little run, and they're right off again. So it's amazing the range that they've been able to hold, and I've been surprised. And then GLD. With the Fed raising rates, gold should be getting softer, and as you can see, it is. I'm not a gold fan. I don't think it's going anywhere. So that's not one I'm a huge proponent of. Our gas stocks, these are the ones that tend to drive the market. You can see Apple ended up, I think, flat on the day or up on the day. It touched yesterday, flat today. Facebook is up, Google is up, and Amazon is basically flat. So they're not doing much. Financials are down a touch. I saw General Electric was down some, but these financials are all down, and so that's kind of been what's been driving stuff, along with retail in general, which has been soft. I think we're going to see, I think we could see, and here's that Snap IPO already coming off. Careful, this is a short squeeze trap. So it may get to 20, and then it's going to start to get harder and harder to borrow as people pile in, and then it will pop. So that is one to keep an eye on. It lists options, I believe, this Friday. So just be on top of that. It looks like we're going to get a rally. The Dow's not doing much. The NASDAQ's not doing much. The S&P is down more than the NASDAQ and the Dow. That's usually been a sign that we're gonna turn around. The worst sector appear to be oil and some building materials and financials. But we're now seeing some of the safety stocks, which have been kind of hammy. And you can see healthcare is down significantly, and that's because of the New bill. So the new healthcare bill, which is a start. It has flaws, but is a start. And so there are some, some fun, some interesting things. It looks like we're going to catch a bit out of this, but who knows? That's my God. All right, folks. You got questions, you can email me, mark@optionpit.com, or call me 888-TRADE-01.